Great. So, welcome back, everyone. We're thrilled to jump into our next session. I'm Theodora Lee Joseph, analyst here at Finimize, and it's a pleasure today to be joined by Scott Hardy, who is the CEO of Trimaxian, for our session titled Opportunities Beyond Stocks. So, Trimaxian focuses on litigation linked investments. It's a fast growing space that isn't tied to stock market performance, and Scott spends his time looking for returns where most investors aren't currently looking, which is why we're so excited to learn from him today. Scott, it's fantastic to have you with us.
Thank you, Theodore. Theodore, great to be here.
Yeah. So today we'll spend 15 to 20 minutes in a fireside chat, and then we'll open up the conversation to your questions. Um, to kick us off, Scott, for years, investors have been taught that stocks are the best long term wealth builders. Now, as we look ahead to 2026, in your opinion, what's changed in the global investing environment that makes it so important to look beyond simply stocks?
Well, I learned early on in my career in the legal field that the great thing about being involved in legal tech or large mass tort law for lawsuits or class actions on the plaintiff side, which is all that we do, is that whether there's a recession, whether the stock market goes up, goes down, all of these cases are still being filed. There's still being this action within the court systems, even when we had the big COVID shutdown. Well, there was a delay, but cases still went through. And so it's a great way to take a portion of your wealth and invest it into litigation. So no matter whether the stock market's up, down, whether there's an AI boom or the AI bubbles popped, or there's a crypto boom, oh no, it's a crypto winter again. These cases are still getting filed, cases are still getting settled, and the investors who invest in this litigation are still getting paid.
Yeah, that's so important. It seems like, in the last couple of years, we've seen many unpredictable events, black swan events, political turbulence, and so it's very important to diversify.
Yeah.
Building on what you just said, when you think about alternative assets, be it private equity, infrastructure, real assets or like real estate or precious metals, what areas do you think are the most compelling right now and why?
Well, I mean, I'm an entrepreneur. So I start companies, I build companies, and I always try to invest in myself. And it was really great once I launched Trimaxian, is that now all of a sudden my friends and my family had ways to invest directly in litigation. Because when I look at alternative assets, um, I always look at large VC funds, private equity funds, of course, investments in startups and venture capital investments. That's what's most exciting to me. I personally do have money in my 401k and my funds that just sits there to not be touched. But the vast majority of my wealth is all invested in the companies I run, including the funds that I run. I'm one of the many people out there that doesn't just say, invest in me, and then I've got all of my money over here. No, all of my wealth is invested in these three companies that I've built over the last 18 years.
Yes, that's really interesting. So in terms of, you've got skin in the game, and that's what makes it so interesting. Speaking of, let's try and widen the lens for a moment. Um, Beyond just kind of alternative assets, within equities itself, we're starting to see renewed interest in emerging markets, particularly in Asia and Latin America. What's driving that, do you think, and how can investors capture those opportunities while managing risk?
Well, I think it's interesting when we look at our emerging markets. And of course, I am in the legal field. And so I'm in mass litigation, class actions, mass torts. And I've been popping out in the UK for the last 4 or 5 years as now the class action system has taken form. We have the CAT, the competitive tribunal that is handling these cases in the UK. You have a class action system that has now been built in the EU framework. And so you have mass litigation that is going out in Europe. And in each individual country, there's now opportunities that you can take cases that were essentially filed in the US and then start taking that same theory in other countries. We also see that in Asia. We look at class actions have been filed and won successfully in China. We do not work in that market. I know a friend of mine just acquired and went into Thailand and is going into Thailand specifically. So it's all of these burgeoning markets as we're trying to figure out ways that we can invest our assets in things other than crypto or stocks. There are really interesting things happening all over the world. And, there's a similar class action and mass tort system in Australia. So when all of a sudden you go, all right, so we can take this theory that we're running and we could launch it in the US, Canada, the UK. I don't want to say quite EU wide, but it could be Spain, Italy, Netherlands, Germany, even little countries like Cyprus. There's all these really crazy developments that are happening that are going to continue to mature and expand over the next decade around the world. So for me as an investor and as someone in the industry, it's super exciting to see all these dynamic changes that provide opportunities. I get calls literally every week from attorneys in Poland, attorneys in Cyprus, attorneys in Spain, attorneys in Italy, and they're saying, Scott, can you back these cases? I'm like, well, let's take a long look at that, because we need to make sure that the returns are actually there. And as you know, sometimes, not sometimes, all the time, when you're the first person in an industry and you're the first person going out there, in this case, filing these cases, it's going to be a long road, and it's going to be a challenge to get paid. I had one of my friends who was one of the CEOs of one of the largest law firms in Australia, and he filed a big case. And he said, this is great. This is a great strategy, Scott. We can settle this case in the US. We can settle in Australia. We can settle in the UK. This is perfect. And then couldn't get on the phone with the legal team of the defendant. And so a year and a half in, nothing's happening. The case is just dead. So then he had to change his approach, go out to New York City, meet with the actual lawyers, move things along, find additional levers to push and pull to make progress. And I think that we're going to see that same kind of energy happen in a lot of these countries and we have over the last 5 years as cases have been filed. And things like in Portugal.
Yeah.
And of course, people love the golden visa in Portugal. Well, Portugal has a very active mass litigation system. Cases are going through the courts. And a friend of mine is one of the top lawyers in that country handling these cases. And talk about exciting places, because you have a populace which is embracing the system. You have cases that are moving. You have cases that are settling, and it's as you tell. I mean, I'm a legal nerd, so this is all super exciting for me.
Yeah, yeah. Just to take a step back, because you're talking about all the different cases, and it seems like it's complex. Each case there are no two cases which are exactly the same. How do you think about, if I was an investor and I was investing in equities and deciding to invest in litigation funding, how would you describe the returns profile of, say, investing in purely stocks versus considering litigation funding, and the risk profile especially as well?
So, like any investment, I always tell my friends that are coming in, and let's be clear, all of the investors in all my funds right now, it's all friends and family. These are all people that I've known for a long time. So I have to deliver. Jeez. But the risk profile for litigation, in almost every mass litigation case, which is what we do, we don't do patent lawsuits. We don't handle trademark or bankruptcy, stuff like that. We're doing these mass cases. The first fund was focused on toxic baby formula, which allegedly causes necrotizing enterocolitis in premature infants. And so, that case is moving along quite well. Second fund was focused on video game addiction. I've got over 14,000 clients in our law firm for that case specifically.
Wow.
And we've got our third fund right now, which is focused on social media harm. And so that largely young women who were on TikTok, YouTube, Instagram, and they developed body dysmorphia, severe depression, suicidal thoughts, suicidal ideations. And a large percentage of our clients in that case, which is our current fund, are suicide and suicide attempts. And so there's the great thing about when you're investing in this is that you are actually helping connect with these victims. But of course, we're all here, we're financial folks, we want to make money. When you invest in these cases and our cases go well, which I won't even knock on wood, it's just going to make my dogs bark. But you're going to see anywhere from a 2 to 5x return on your investment. And these cases can take upwards of 3 to 5 years. So the return tends to be faster than like a venture capital return. We actually should see a return within 3 years for our first fund. That's what we're expecting. We're really hoping for about 2 years. And those funds should see that minimum of a 2x return on the investment during that time frame. And it's a lot, but we front loaded the first funds with mature cases that have already been litigated for years. And the thing to remember when you're investing in mass litigation is that 90% of the cases settle. And as long as, of course, you're picking the right case, the case theory is solid, your experts are solid, you shouldn't end up with the goose egg. You shouldn't sit there and go, oh my gosh. Even a very, I'd say more famous as mass litigation called Zantac, which is heartburn medication. And that went through the MDL system, the multi-district litigation system. And the plaintiff lawyers lost their experts and the case went poof. And so everyone, oh my gosh, the case is dead. Well, I wasn't involved in that case. I took that case into state court, and we already have 2 separate settlements in place. And so you have to make sure that if you're investing in a case, that you're investing with someone who has the right strategy, and that the person who is investing that money is taking it and, of course, investing alongside you, ideally, but also that they are using that expertise to make sure that your investment is safeguarded, and that the strategy for the litigation itself is something that they're watching very, very closely. Because it's easy. There are people that just go ahead and since we were in Trimaxian, right, we get pitched by law firms. They say, Scott, give us $1 million, $5 million, $10 million, $20 million, whatever it is. And I got one. They said, Scott, we invested $1 million already. We know what we're doing. And I looked at it and I went, your strategy was terrible. Terrible. But, who knows? Maybe they'll get somebody else to give them some more capital. But it's just that I've been in this industry for 18 years. And the biggest question we get is, how can you go ahead and say that you're going to see a 2, 3, 4x return on your investment? Well, a lot of these cases, we're trying to get that 2x return on the investment from the first defendant. And in our cases, we typically have multiple defendants. Social media harm, we've got 5 different defendants that we're suing. And so we're going to see one settle, another settle, another settle. We're going against Meta in January. And Zuckerberg's supposed to go on the stand. Do you think Zuckerberg's going to go on? He was forced. The judge already said you have to go on the stand in that case. Do you think that they're actually going to want him on that stand to talk about how they had a what is it, a 16, 17 strike policy against child abusers on their platform, that you could sit there and they would pump as much harmful content to young kids, targeting them specifically, knowing they're young kids. I don't think so. So we'll see. It'll be
Yeah.
interesting to see how things shake out over the coming months. But as you
Yeah.
saw, sorry, I get very excited about this stuff.
I can tell. I can tell. I guess just a difference between kind of looking at litigation funding in alternatives compared to equities. It seems like from what you're saying that, it's very much long term. You can't just dip in and out, in an instant and hope to make a quick trade. The other thing it seems is like, you need to get the right people to manage the cases, picking the right people, the right cases to be involved in. And it's very high touch as well, right? So it's not kind of like a blanket strategy where you can just roll it out as well.
No,
Just like that. Yeah.
yeah, exactly.
Um,
You've got to roll out the money because the money goes to find clients, find victims, and then you might be funding a law firm. These cases require tens of millions, if not hundreds of millions of dollars to run. So
yeah.
it takes massive investment, and then you're not going to get paid until the case settles. And so there's nothing you can do once that money has been deployed and the case is moving. You're in it until the
Yeah.
case settles. And then, but
Yeah.
even with that Zantac case that died completely, oh, it's got new life in the appeals courts, and it might come back in the first quarter. And so that'll
Yeah.
be really interesting for some folks that took that case through federal court, and that was where it died. All of my cases that we were involved in were in state court, and that was a very intentional strategy.
Right. So high risk, but also, higher returns to compensate for that risk. I'm afraid that might be the end of the time between us. But I think it's now time for some audience questions, and we've got a couple that's lined up already. So the first question is from Josh M. And his question is, for someone who's only ever invested in public markets, what's the safest or most accessible way to start exploring alternatives? I guess, just to summarize the question, if I've, he's not like dipped into alternatives, is litigation funding the first option he should go to? Where should he start? How should he think about this for his portfolio?
I would think that for someone like that, and a good friend of mine did the same thing. His family passed away. All of a sudden, he was sitting on multiple millions of dollars, and he said, "What do I want to do with this money? I mean, should I give it all to you?" And I'm like, "All right, I am not a financial planner. I run these litigation funds, and
Mm,
I would always recommend that if you take alternative investments, whether that's litigation funding or other investments, and you take a portion of your investment, 10, 20, 30%, whatever it's going to be, and dole it out there, and make sure that you are taking multiple swings of the bat, which is
mm,
one of the reasons that we are launching a new fund every quarter. And so that way you're able to diversify your investment in multiple cases. And so then long term, you're going to see fund two, fund four, fund five, fund three all start paying out. And I think diversification is just so important. But I think you want to get into something that is interesting to you.
mm,
You are passionate about. If you're passionate about art, maybe you're going to be buying fractions of artwork. If you're passionate about tech, then coming into litigation and saying, "Hey, well, I know what's happening with kids and social media. Let me go ahead and put some money into this fund." Because if you talk to anybody, in fact, my daughter just last night said to me, she goes, "Daddy, my neck hurts." I'm like, "Do you think it's because you sit like this against the couch and you're staring at your phone? Is that it? Could that possibly be it?"
yeah.
Like, "No, Daddy, that's not it at all."
Yeah. On the back of that, when you're talking about, how to start exploring alternatives, what mistakes do you see people who are just starting out? What kind of mistakes do you see them making when adding alternatives to their portfolio?
Well, I see it. I think a lot of us saw it with crypto and
Mm,
with AI, and it's just that they would so all of a sudden they'd move 85% of their portfolio into it. It's just like, no, come on, 10, 20%, do something reasonable, safeguard your wealth, um, because all of these assets do have risk, right? Even though in my example, 90% of the cases settle, well, there's still 10% that could result in you losing part of your investment, if not all of it. It's very rare, but it does happen. And so I would just really want to make sure that someone is investing in something that is a portion of their fortune, not the majority of the wealth,
mm,
and that they go into it. You could start an investment in our funds at 50,000, so it's not a massive chunk, and then you can.
mm,
And a friend of mine did this, and he said, Scott, all right, I'm in. And he said, I've got 300,000 I'm going to put in. I said, okay, well, let's not put this all into this fund. Let's go ahead and divvy that out over the next three funds. So that way you're going to start to see a return here, because I think this case is going to settle fairly quickly. And then this one, the return on this one's looking fantastic. And then this one over here. And then being able to go ahead and put a little in each case.
mm. Right, that makes sense, especially if, we're talking about 3 to 5 year kind of a lock-in period for some of the cases or funds. Then you kind of want to play with money that, investor money that you probably won't need to touch for some time.
Yeah, and it's interesting. We're already looking at possibly selling the interest for one of our initial funds to another large, massive fund. And I
Right.
talked to one of my investors, and I was like, "Hey, we were talking about like a 3x return on your investment. This is going to probably return you 50%, but it'll be in a year." And he said, they're like, "Hey, that sounds good." I was like, "Really?" Because I thought you were going to be in it for this 3x. And he said, Scott, and this is a very, very wise investor, with a significant sum of money behind him. And he said,
Mm,
Scott, all I've learned in all of my years of investing is if that someone offers me an over market return on my investment and it's safe and I can cash out now, great, pay me. Then I can roll that into something else and I can make sure. And so I don't know if that was a direct answer to the question or not, but it's interesting, even in our market, where I would say that our capital, when you invest, your money's locked up until that case settles.
yeah.
Sometimes opportunities present themselves. And if that opportunity presents itself, then we're going to talk
Mm.
to the shareholders of that fund and say, hey, this is what we're looking at. And if the majority of the shareholders are saying, yeah, this sounds like a good idea, let's do it, then maybe we do exit a litigation early, as long as we're presenting a very solid return to our investors.
Right. We have a next question from Sebastian. He's asking about, how litigation-linked investing behaves during market downturns. You talked about it earlier on. And also as a follow-up to that, are there types of legal cases that tend to produce more stable returns than others?
So litigation doesn't match the market at all. If there's a recession, if there's a depression, if there's a boom, doesn't matter. The litigation continues to get filed, cases are settled. And that frankly saved me when I launched Top Class Actions. And the way everything flows is we raise the money through our fund, we loan it to a law firm that I own, and then we spend that money through our marketing agency, Top Class Actions, which gets 2 to 3 million viewers per month organically. And so we've got this closed system to be able to make sure that every penny that's spent is accounted for. And when you're looking at litigation, if you go to the big guys like the Burfords, well, the Burfords are going to require you to put in probably $500,000 to maybe $2 million as a minimum. And they are focused largely on bankruptcies, patents. But in my opinion,
Mm,
there's more uncertainty in some of that litigation, uh, with some of their targets, than what we do with mass litigation, where we have thousands of plaintiffs and, thousands of clients that we're representing. And we tend to only want to get into litigation that I have a direct knowledge in.
Mm-hmm.
And so, I'm like anybody, I guess. I'm still a traveling salesman going conference to conference to conference. And over the last 20 years, I've made these relationships with these lawyers who are the litigators, and they're the ones that are in the courtroom filing the cases. So you have to have a very deep understanding of how that case is going. But in general, I think it kind of depends on what your investment appetite is. And if you're someone that's sitting there saying, I don't like the drug lawsuits, so I don't want to sue Meta or TikTok. They're making my children smarter. Then let's go ahead and go with a Burford and spend $1 million. But talk about locking up your money. You do that money is typically completely locked up, and those cases all of a sudden can get drawn out and long for a decade. So we're doing something that's very special and unique, being Trimaxian, and doing this, allowing accredited investors to invest in specific litigation. So you can pick which one you like. If you're like, no, I don't want to sue TikTok, I don't want to sue Meta. What's the next case? Ooh, the next case involves, which we're going to have launch in January, is in sexual abuse of minors. It's terrible. We're signing like one sexual abuse, like a child who is actually abused a week right now. And right now we've got 2 or 3 multi-billion-dollar defendants that we're going after for those cases. Mm-hmm. And the defendant in that case, we're going to launch that fund in January. They literally kicked someone off their platform that was getting pedophiles arrested. What?
Wow.
You've got someone on your platform which is actively going after pedophiles, getting them arrested, and you kicked them off your platform. So are you truly protecting children, or are you protecting the pedophiles? What are you trying to do here? And now in the past 3 months, they've rolled out a lot of more protections to try to keep the children, but it kind of rolls into that: invest in what you are passionate about.
Definitely. And it seems as well as like invest in what you have knowledge in, or at least someone who has knowledge in, because this is quite a high knowledge, high touch type of asset, that you'll be investing in. I guess this also answers Amki's question about, whether it's possible to pick specific cases to invest in, or do you just invest in a set of cases that I would say a fund manager picks. And it seems like you can, they're different. You can, depending on, if it's like a Burford versus a Trimaxian, the different types of cases or specialty they choose to invest in. Am I right?
Exactly, yeah. So we have our 3 funds right now. The first 2 are closed. The third's active. And you'll be able to pick. Well, if you don't like social media harm, then, stick around in January. This is a blockbuster case. We've already got close to, I think we're up to about 100 clients that are signed to the law firm that have been sexually abused in some way, shape, or form by a massive video game platform. Mm-hmm. And so that fund is going to be coming out next month, and you'll be able to pick it. If you're like, no, I don't want that one, I want something else, well, have no fear. In the next quarter, we're going to launch another fund. And then in 2027, we'll be launching a large fund that will be going after everything. So it'll be more of a traditional fund in 2027 sometime that just goes ahead and starts deploying capital to multiple cases, where you will not have that ability to select which cases you want to get into. But overall, if you're just shooting to help people and make some social justice for these victims, then we're a great place to go, because your money's directly going to helping sign these folks and then get them compensated. And then when they win, guess what? You win.
Great. Seems like there's lots to stay tuned on, and lots of new things coming up. I'm afraid that's all the time we have for today's session. Thank you so much, Scott, for sharing your insights. And thank you to everyone for your thoughtful questions and active participation. That brings this session to a close, but stay tuned because we'll be back shortly with more great conversations. See you soon.